Okay, welcome back, AJ. Today we're talking about discussing accounting for your business and nonprofit. This is a presentation that you gave the Chamber of Commerce for Beaverton here in Oregon.
Yeah.
How long ago did you do that presentation?
I think it was like 2 weeks ago.
Okay.
Like middle of February.
So this is fresh.
Yes.
Fresh off the circuit. You're
Yes.
ready
Yeah,
to
yeah.
talk about accounting for small businesses and nonprofits. And in the presentation, you talk about why accounting is so important, and you list multiple reasons for that.
Yeah.
I guess let me start off the gate. Is accounting for nonprofits and for small businesses the same?
No, I mean, it has different, name conventions and stuff. And there's probably some more, intricacies or, requirements that a nonprofit would have of, donor tracking or restricted grants, kind of. But underneath the hood, right, it's all debits and credits and who owes you money and, kind of forecasting and then, a net revenue or a net profit kind of look at it. So from a base level, I would say probably very similar, when you get to end cases of where your money's coming from and how you have to account for it, maybe that's a little bit different, from a nonprofit point of view. If you get restricted donations or something like that, that's something that a business wouldn't have to necessarily enter into. Well, maybe customer deposits would be a bit like it, but I guess in my mind, when I was putting together the presentation, it was a very base level kind of what do you need to know and think about in the accounting of your business. And, then I was hoping it would generate questions or follow-up emails from somebody that may have further questions and wanted to dive deeper into an area. But from a very, baseline level, it is money in, money out, who owes you, who do you owe kind of situation. The financial statements don't change for a nonprofit and a for-profit business. They're just named different things,
Yeah, so this is really about the nuts and bolts and the fundamentals, the process and the systems to record transactions and to categorize things and to, and as you said, the kind of most basic financial statements. And so your point, hey, the line items may be labeled differently in a nonprofit or for-profit. Some of the accounting methodologies may be different. Accounting standards for some of the methodologies for cash inflows and outflows may be different between those two things. But what's under the fundamental kind of structure or framework in terms of how you actually get the accounting done is quite similar. And that's that's kind of what you were presenting on is why is that important, and what do you have to do to be able to what do you need in order to be able to do that?
Yeah, and my thought behind it when I was really putting it together was too often I've encountered small businesses or nonprofits that accounting is this thing that they're required to do or they do once a year. And my thought behind the presentation was really trying to give them reasons that they should look at this more up front, and really, I think a lot of people think about legal, like forming a business and getting your legal side done, or tax preparation is something you have to do, and then sales, of course, they put a lot of money around sales, marketing, and what you're going to sell. But accounting is kind of, I feel like, can I use the word red-headed stepchild of that group where it's it's kind of often ignored or left to the side until it becomes a problem later down the road or something. And I guess we should do something. I guess a lot of people don't, I get the impression a lot of people don't see the value. Of course, we're accountants, so we see a big value in that. But often it's seen as an afterthought for a lot of these small businesses, I feel like.
And in the presentation, you make the case for several reasons why accounting is important. Mm-hmm. But if you had to narrow it down to the single most important reason, which one would you focus on? I mean, when you say, it's valuable, why is it? What's that single most important thing that accounting does for you?
Sure. So going back to those businesses that I've interacted with where their accounting wasn't squared away or they haven't thought about it, really, they only know how their business is doing through a very touch touchy-feely way. Like, oh, I think it's going pretty good. We have sales, I have people employed. I have a little bit of money left over every month. But to really key in and know the financial health or wellness of your company or business or nonprofit, and we can talk about requirements for nonprofits, but you really need the underlying accounting to be there to be able to look at it, especially if you're looking at like loans or getting credit for your business or anything like that. You can't just go in on a handshake. You need to present financial statements to do this. So that was really, I think that's probably my core thing that I would say is the most important is to look at the value that you get out of the accounting records itself.
And if, as you say, the core value proposition of good accounting is an organization's ability to see or understand their financial health, what does that mean to the layperson when you say their financial health?
Right. I think it's like understanding, are you profitable? Like that would be goal number one. And you may not be when you're starting out, and that may be by design, but to understand where your money's going as opposed to like retroactively just looking at your bank statements, or something like that. This is a very, powerful platform that you have if you're keeping up your accounting system to be able to really zero in on where your money's going, how it's being spent, where it's coming from. There's a lot of information embedded in there that I think if you're not on top of it or you're not doing it, that you don't have access to.
Well, I think the part of what you're saying and you're getting at that really resonates with me, and also what I promote with clients from an advisory standpoint, is when you talk about understanding where their money is going, where it's coming from, and where it's going. It's really, if we summed it up in a word, would it be fair to say cash flow?
Yes.
That really that fundamental value proposition is understanding cash flow, the cash flow that's occurred, and what that might mean about the future cash flow prospects of the organization, right?
Yeah. I used to be in construction, and I had a friend that had a company, and he was growing like crazy, and he was just really gung-ho about like having so much work. And 2 months rolled by, and he was like, looked really stressed, and I asked him what was wrong, and he was about on the verge of bankruptcy, and he couldn't understand, he was almost insolvent, and he couldn't understand why he had so much business, and he was, he was so cash poor. And the reality was, when he went and looked at the books and where his cash flow was going, was to make that expansion, he had to put out so much money that it almost sunk his business, But because his underlying accounting books and records weren't there, he didn't plan for that expansion. He didn't know the ramifications of such a drastic increase in his sales. So, and I think accounting bears that out, or a financial plan bears that out. If you're planning to grow, you have a good idea of the cost it's going to take to do that. But I think to the layperson, they're like more sales, more money, more jobs, more money. And I think naively they think that because, as my example points out, is you have to hire people, you need materials, you need supplies. There's this lag in the money going out. There's a lag between that and when the money comes in. And so understanding that and having at least the financial framework to be able to work that out, it's invaluable, I think, and a lot of especially small businesses or startups don't think about that, or in my experience, many of them miss that.
Yeah, and I think on the topic of, if we accept this proposition, which of course we do, that accounting is important,
Sure.
then when you get into the topic of, well, where do you start? Where do you start on this accounting journey? And I think that for the uninitiated, I think they would default to, well, you fire up QuickBooks or your favorite accounting software and you start entering transactions. But you actually promoted in the presentation what we say as a firm, that the process really should start with planning and budgeting.
Yeah.
Can you speak to that a little bit? Why does the process start with planning and budgeting as opposed to just recording transactions in your accounting software?
Well, because like the old adage, right? If you're not planning to succeed, you're planning to fail. And I think a budget is that. Like, you're at least putting pen to paper and considering what it's going to take to run this business, or operate this nonprofit. And through a budget like that, and I descriptively go through it in the presentation, is you want to link that budget back to your accounting system. So in essence, in any small business, startup, course you're going to take. They're going to have you put together a business plan and a budget. Use that time to really think about what that cash outflow is going to be for you to get this thing up and running. And if you have this budget, then you can look back at it and kind of use it as a measuring stick on how you're doing here. The other thing you've done without knowing it is essentially set up your chart of accounts. And that's really why I thought starting with a budget for somebody that's, doing this for the first time, or even if you're an operating business and you haven't really thought about a budget can really help you like zero in on, I think, what's important. Oftentimes, like if you do just fire up QuickBooks and allow QuickBooks just to grab your bank statement expenses, all of a sudden you have an expense categories that, there's a line item for every expense. You know what I mean? Every check you write is its own expense line, and that doesn't do anybody any good, because it's lost in the noise. So budget really, I think, and we've talked about budgets before on this show, but I think it really narrows in and kind of disciplines somebody to understand, like, okay, putting pen to paper and understanding what, how many varieties of sales do I have? What are my large chunks of expenses? That kind of thing. What are my, and how are those going to feed into how I'm growing or getting started, I think.
Yeah, no, I think that very much aligns with my experience. And I think what I think about as you're talking about that is, as you're starting your accounting process for an organization, maybe it's a new organization, or maybe it's just it hadn't had a good process to begin with, and you're starting relatively fresh with a process, and you think about, well, it's this thing where you're going to organize all the accounting data, all the transactional data that comes into this business or this nonprofit. You're going to organize that data into different line items, into different categories. And as easy as QuickBooks is, and these days QuickBooks or Xero or FreshBooks or all these different accounting softwares that are out there, they are much more relatively easy to work with than maybe, let's say, they were 20 years ago. But even so, comparatively, it seems to me that lining out your line items and really thinking through your categories is easier to do in a budgeting exercise like in an Excel worksheet than it is to do in a software setup exercise in one of these software packages, right?
Right. It's almost like what do they call analysis paralysis? Because QuickBooks comes preloaded with most of your general expense categories you would ever need. But oftentimes when somebody's looking at something that they don't understand, like more is more, where we preach, or at least I do, I preach less is more, you know what I mean? Like it doesn't do anybody any good if you have 2 pages of, 12 font expenses and they aren't categorized. It's just everything under the sun that you could ever, like we were talking about, an expense line for every check you write. That doesn't do anybody any good. And so QuickBooks is set up like that, though, where it has essentially preloaded set of accounts that for everything you could ever think of. Your business not might have deferred revenue, but it's in there. Your business may not be set up where you have to take draws from as an owner, you have to take draws to get paid, but it's in there. So all these like accounting terms that are set up in there can be confusing and I think overwhelming and, cause somebody to end up with, a mile-long chart of accounts. Whereas if you're going from a budgeting standpoint, using the construction thing, as an example, you have labor, you have, materials, you have vehicle expenses, and you keep your categories pretty slim and narrow and, kind of around what you do. I think somebody describing what their expenses and revenues are coming in, say you have remodels and new builds, if we're talking construction. I think that's much easier for somebody to write it in plain English than to try and, sift through what QuickBooks is giving you as, they're shoehorning you into these, expenses.
Yeah, I think, as you raise this, in accounting lingo, what we're saying is that the budgeting process helps inform your chart of accounts.
Yeah.
And so, and that's a technical term. What is a chart of accounts?
And I said it in the, and I almost left it out of the presentation because I wanted this to be very approachable for the end user. And oftentimes I think sometimes we speak in accounting so often that, like, and it is its own language, that we can almost get lost in our own sauce and assume that everybody knows what we're talking about. So, and I tried to break it down very simply. Your chart of accounts is all the underlying general ledger accounts in your accounting system, and that goes from, and it covers your two main financial statements, your balance sheet and your income statement. It is all of the permanent and temporary accounts in your accounting system. So, yeah, like you're saying, when you're going through this budgeting process, it really can drive home your chart of accounts. You can be doing something that, just creating a budget, and lo and behold, you have created your chart of accounts or gotten very close. Somebody could, and a good accountant or somebody that knows accounting or knows QuickBooks could take your budget and very easily set up your chart of accounts for you, or you would be able to muster enough if you just took a little time to do it yourself. So, yeah.
Yeah, and I hear, and I think our audience most likely hears you saying, hey, it's a mistake to start out of the gate with a super crazy long chart of accounts, right? The chart of accounts being that category, all those categories of accounting line items that are going to be on financial statements or in what we, from a technical standpoint, may call the general ledger of the company. So how should an operator decide what those categories are, what should be in their chart of accounts?
Yeah, I think it would be, they really need to look at what's important to their business, I think would be one place to start. But also, I think I've seen more often than not, the more is more approach where, let's have, payroll taxes, benefits, and then list benefits each one, like workman's comp and health insurance and dental insurance and, then insurance, and you got, liability insurance, vehicle insurance, D&O insurance, director and officer, and you have all these categories. I would say if they're similar, you need to group them together. You should have one line item that's in insurance. And then underneath insurance, you can have all the different types of insurance you would like. Because, I think at the end of the day, you want something that's usable and you can glean insight from. And if, you can always go and look at what your D&O insurance costs or your vehicle insurance or your health insurance, however you're dividing these. On a financial statement, does it really matter the difference between your D&O insurance and your vehicle insurance? It should just be one insurance line,
Yeah, it sounds like that decision to be more detailed or more summarized can be somewhat subjective, but you're linking it to what would be useful. And I guess if we're taking this conversation back and we're connecting how our choice in the chart of accounts to how we set up the budget, then perhaps one way of looking at it is, what would you budget for that line as a separate thing or not, right?
Right.
Is it something that whether you have it or detail, when you say useful,
right.
What I hear as somebody who helps businesses with planning and with their business planning and financial planning is useful to me means, well, how am I going to use that to plan?
Right.
Like, is that something that I would do I actually plan my insurance costs into future months based on the type of insurance, or do I plan it based on a general knowledge of what all of my insurance costs me?
Right.
Seems like that would be what do you think?
Yeah, no, I totally agree. I think your budget should match your GL, and we've talked about that already. And I think we haven't gotten into the reason of why that is, but I do think, from a planning standpoint, one of the great things is when your budget matches your general ledger, it's very easy to look back and see how you did. Let's scorecard this. Let's look at our budget to actual on that. And then from a planning standpoint, okay, I know that insurance last year was, X amount. We're 6 months through. Are we on track to meet the budget requirements that I set forward in my planning model? From a planning standpoint, or did our insurance get jacked up? Do we need to call our provider and ask why it's 25% more when it was supposed to be 10% more? Was there a claim? Or dig into why that would be different, And so really the budget is setting up that expectation of what you expect. And then the actuals coming back when you're comparing it, apples to apples, it's like, what happened? And I think that's where you really gain a lot of insight, I think.
Yeah, I think that sounds exactly like my experience and what I often think of as the litmus test, because for our audience that are accountants and maybe they have to work with other accountants or they're working with operators who, like as you said, they think they have a more is more attitude, and they're just thinking, well, QuickBooks has these different categories. I could track more. I could track it in more levels of detail. Why don't I? I think that the answer should come back to, well, are you actually going to budget at that level of detail? Right. Do you actually think at that level? And I think you may not win that conversation if it's just that person who just wants the more, right? But at the end of the day, I think it may be illuminating to that person as well, if they have to admit that they're asking for something that is beyond the scope of what in the way they actually even think about the business anyway.
Right.
And so I think that's always great to just ask those kinds of questions and get people to think about why they're asking for that more information, because in an accounting environment, accounting is not it's not costless, right? I mean, I think sometimes people, when you talked about people undervaluing accounting, I think part of that is they undervalue the time and effort that it takes to do good accounting, and they think, well, there's an unlimited, we can produce unlimited amounts of information. We have an accountant on board, so that means that we're at an all-you-can-eat buffet for the accounting information we can produce, and and that's just not the case, right? I mean, anybody in a professional accounting world knows or has lived through that process and realizes there is still a cost-benefit analysis. There is a cost to every piece of information that the organization wants to have, and there's a benefit to whether they have that information or not, and that has to be weighed out in some way in order to figure out what are we going to do here.
And I think understanding your either internal or external accountant's abilities. Everybody's at a different ability set here, so don't ask your staff accountant or your general ledger accountant to try and stretch this. Also, too, be aware of what your accounting system can spit back out at you. Your accounting system, for the most part, isn't your inventory system. It can be, but oftentimes in our experience we found that it usually does better if you have a dedicated inventory module or an outside, or budgeting is another one, right? Often people see, budgeting is included in my QuickBooks. Well, is it really doing what you needed to do inside that program? The minute you get into more classes or more departments, it gets very cumbersome to keep a budget in the accounting system. So it's probably easier to do that work on an Excel sheet outside of it. So, I think realizing and having that discussion too about what's important, and if you're in a situation where more is more, you have somebody that more is what they're wanting, being able to describe why less is more, you know what I mean, and understand and get them to understand that the accounting system isn't the end all be all for all your financial decisions, but it's a large portion of it, and but your accounting system is there to do the accounting and not your CRM system or your cost accounting or anything like that. It can help with that, but I don't think that's your end goal for how you set up your accounting system.
I think that's a great point that you're making. And in that context, when you say accounting system, I for our audience, be precise with on my part and say, we're talking about the general ledger system, the QuickBooks kind of thing that you have available there, and this idea that you shouldn't try to use the accounting system to be the 100% information system for everything going on in your company, in the small business environment, that is, right? Like in larger businesses, they have what are called enterprise resource planning systems that are designed for that purpose. But while some of the accounting systems will make it seem as if they're designed for that purpose, in practice, I share your view. They don't work well for that purpose. And I think and even on that point, like you brought up, not trying to use it as the sole information system for your entire company, whether it's accounting or not. But even within the accounting zone, I think one of the things, and I saw this in your presentation that you made this point, that even when it comes to accounting, not every accounting calculation or work paper or documentation or the way you methodology that you might step through, and you mentioned cost accounting would be an example of that. For example, cost accounting for inventory. Not all of that is going to live in the small business or small nonprofit accounting system like a QuickBooks or a Xero or something like that. In our experience, anyway, it's not going to live there, and you're likely to be using ancillary things like Excel or Google Sheets or even other third-party apps to provide or do supporting calculations that lead to balances that go into your general ledger system like QuickBooks, but the expectation that all accounting calculations are going to be housed and handled within the QuickBooks. I've seen that as a rabbit hole that a lot of operators try to go down. Like they try to stuff everything that could be done accounting-wise into that accounting system, and it actually causes them more problems than they realize. And they think they're doing it for efficiency, but they're actually creating a lot more problems. Yeah. What's your view on that?
Well, the other one that's a real big one are these add-on like apps, like, oh, we have an app to solve that integrates with QuickBooks. And more often than not, yeah, it can work. You know what I mean? It's not advertised as is because it never works, but the setup time and the understanding of how the system works, you usually have to do it in a manual way anyway to make sure that what you're automating or what you're bringing in, and you're using this, substack of apps or whatever it is that you're connecting to QuickBooks. Payroll is a big one, right?
Right.
QuickBooks Payroll just automatically integrates with your system. Well, if you have to allocate over departments, if you have somebody that's salaried that works in 5 different departments and you need to chop their salary up, that can be really hard if it's just automatically fed in, and directed there. Does it work to chop up that person's payroll, 5 different ways? Is that integration going to work? Or is it easier for you just to take everybody's payroll and allocate it in through a spreadsheet and a journal entry?
Yeah.
No,
I agree 100%. And I think for context for our audience, I mean, we see this, with payroll, as you talked about. So payroll systems, even, traditional companies that do payroll, like even just an ADP, they have integrations with QuickBooks and so on, right? And so you've got payroll companies and platforms which will integrate with the general ledger software, whether it's QuickBooks or again Xero or one of the other platforms. I'll mention QuickBooks here for our audience. I talk about it because most small businesses and nonprofits in the U.S. we should say a lot. I don't actually know if it's most. I don't have the data behind me, but a lot of them use QuickBooks. I think that's fair to say. We ourselves are system agnostic, so we're not here to promote QuickBooks. We're only citing it because it's so commonly used, but we also work with a variety of clients who use other systems. So we're not all in on necessarily using QuickBooks. It depends on your situation, your circumstances. I'll just caveat it there. But anyway, back to this main point. You mentioned payroll systems integration with your accounting software. Another common one would be point of sale systems integrations with software. Sometimes inventory costing systems integrations with your accounting software. All of these things, I think what you were getting at and dancing around, I want to say more clearly for our audience, because this is a pet peeve of mine, is that those integrations are a great shortcut if you understand what they're doing. But so if you think about, if you didn't have the integration, the platform would come up with a methodology or a calculation to some balance. If it's payroll, it's going to come up with what your total payroll cost is and what your liabilities that you owe the employees are and what your liabilities that you owe various governments are, and maybe what your benefit liabilities are that you owe insurance companies and all that sort of stuff. It's going to calculate all that data in the payroll platform. That data is not really being calculated in the accounting software per se, in this kind of thought process, right? And if you just think about it, if there was no integration, and I think AJ said this, but I want to just repeat this very clearly for our audience. If there was no integration, then whatever those balances were, you would, as an accountant, have to figure out what the entry was. And we call them journal entries from accounting lingo, but just whatever the entry was, you would have to figure out the entry to record those balances that come out of the calculation on whatever that platform is into your accounting system. And the same thing is true of like a point of sale system. If you have a point of sale system that's recording daily sales, maybe you're in a retail environment or you're in a restaurant or a bar or something of that nature, it's recording daily sales, it's recording maybe inventory movements. There's a bunch of information it could be collecting and calculating for you. And again, you can take that information and you can record it as an accounting entry, a journal entry into your accounting system. So it's important that the company, somebody in the company, knows what that entry actually would have been.
Yeah.
because what often a lot of times we get called in to work on clients who have these integrations set up and no one ever knew what that entry was. They simply plug the two systems together. And so one system is making an entry into the other system and nobody can write it out on paper what that entry actually is. And that's very, from an accountant's perspective, and also from the ability to audit and understand what's happening in your books, that's a very scary proposition that you just have a payroll platform or a point of sale platform just making random data flow into your accounting system in a way that you're not clear how that's happening. And I think that, that often can be a project that we get called in to do, is help figure out, well, what is happening? And let's define what those entries are and what that process actually looks like.
Yeah, and often what happens, right, it's just an automatic hook. And so all the machines are doing is the using payroll as an example, right? The payroll numbers need to be this, and we're going to put them into these accounts in the accounting system. Well, guess what? If one of the accounts isn't there that this says that it should be going into, this usually just makes up some account to stuff it in there to make it balance. So now you have this uncategorized asset or expense or whatever it needed to make the entry work. And if you don't understand how that works on the underneath side or how that would have worked manually, then all of a sudden there's this new stuff showing up in your chart of accounts that you don't have no idea where it came from. And it can cost a lot of money for us or somebody else to come in there and fix it when you could have easily tried to understand how that entry would have worked anyway.
Right. So I think what we're getting at is, hey, these automated integrations are fine, but first you need to understand what the entry would have been without the integration. You need to agree that the integrated entry is actually doing what you would want it to do.
Right.
And at that point, you can be like, wahoo, it's saving me time because it's doing what I otherwise would have done. But you can't skip that step and have an opinion on what should have happened in the first place.
Well, the benefit to the manual entry, right, is if you get stuck, like we were talking about it, there's not an account that matches what going in there. If you get stuck, you can stop the manual process and ask questions or have somebody answer that question. If it's automated, it doesn't stop. It needs to make the entry, so it's just going to make it work. You know what I mean? And from I guess from an understanding standpoint and from a clean set of books standpoint, that's not a good position to be in. If the machine is just forcing it in.
Now, switching gears just a little bit.
Sure.
I noticed in the presentation that you presented both an example of an income statement and a balance sheet. Mm-hmm. And I found in my experience that a lot of operators don't know much about the balance sheet, and they don't focus on it that much. So why is the balance sheet important for an operator?
Well, because I think the balance sheet is really, what do we say, separates the men from the boys, or, the grown-ups for the kids. Because you could just have an income statement, essentially, and your balance sheet would just be cash and equity if you're operating from a cash basis standpoint, everything else equal, and you're not selling on credit or anything. Well, even if you were, you could still just have a cash basis where, money in, money out. But from, it's called accrual accounting. And so, the balance sheet is really where those accruals happen. Those are your permanent accounts, and those are the ones, like accounts receivable lives there, accounts payable lives there. That's really the accrual side of what we do. What's the old joke? It's an accrual world, so it's accrual accounting. It's like the worst joke ever, but it's the only one us accountants have, right? But so stupid. But so, the point of me showing the balance sheet is because I think so much can be gleaned from the balance. Your cash is there, your assets are there. You're really the valuation of the business. Your assets, liabilities, and your equity. I mean, if you're talking to somebody about what a business is worth, sure, the income statement is great to show you the in and out of cash over a period of time. The balance sheet is the report card. It's really, we're talking very general terms here. This is not technical accounting, but the balance sheet is your report card. How much cash do you have to cover your liabilities? You can look at that on a balance sheet pretty easily, for a snapshot in time. How much equity do you have in that business? In a snapshot of time, if you print out a balance sheet and it's correct, you can look and say, wow, my business has grown over the years, and that's how much equity I have in my business, So from where I stand, if somebody just thinks that they should be doing cash accounting because that's how they report taxes, that's really why I wanted to present that balance sheet and try and, make that plea that people should be using accrual accounting. You're not getting a full picture of your business and how it's operating if you're just on a cash basis.
Yeah. Well, I think that's a good segue to invite our audience to come up, because I want to bridge that into asking our group a question about
Sure.
your presentation that I think that they'll all have insight on. So we'll take a short break, and then we'll have Tammy and Charlie up here. All right. Well, thank you, everybody. Charlie, Tammy, joining us here at the table. When we broke, AJ and I were just talking about why accounting is important for small businesses and nonprofits, and I was asking AJ, why he talked to business owners about the balance sheet as much as the income statement, and that kind of got us into talking a little bit about this topic of accrual versus cash, and I thought that'd be a great topic for the table to kind of kick off this segment with everyone, in terms of AJ made the case in his presentation what we typically say as our firm, that we advocate that organizations use accrual accounting as much as possible. So I'd like to throw it out for you two to kind of throw in on that topic. Why is that? Why would we say that accrual accounting is the way to go?
Well, I mean, I think because a lot of the times that when you look just at the financial statements and you're focused on cash in and out the door, it can be very misleading. You can look at how you think you did that month, and because of a lot of really innocent things like paying a bill a day after that you normally would have, for example, might move its cost into another period and totally changes the way that you feel when you look at that period's financial statements. And so I think from my perspective, looking at things from an accrual perspective really helps you get rid of those boring, not interesting timing gaps or differences that are making it hard to see what your financials are really trying to tell you, because instead you're just hung up on the day something cleared rather than maybe the month it built up leading into that day that you actually paid it. And so that's kind of what it's like from my perspective. What do you think, Tammy?
Yeah. I think it basically gives you a full view of the business. So from both standpoints of, especially if there are situations where you may have a lot of liabilities that you aren't really recording because you're not following the accrual method. And so you're not capturing those or even understanding about those. And I think the secondary part is it helps your business in planning. So when you're thinking about going in the forward months, if you're actually utilizing a full accrual method and you're understanding your books and you're recording the entries as they occurred in the business, you can better plan for that as well and look at it from a ongoing basis. And how do you want to account for that cash flow management, looking at how your business performs. A lot of times you'll see that, especially in terms of mismatching the kind of when an expense occurs versus when a sale revenue per that expense actually occurred, and you're not really matching to say, if I'm way profitable in this month, but I'm way unprofitable next month, to Charlie's point, because of just timing and when I recorded it, you're not getting a sense of how the actual business is performing. So those would be my 2 cents.
Yeah. Is that what you were thinking when you did the presentation?
Well, we keep talking about cash flow, and all I can remember are the wise financial sages that wore Wu-Tang Clan talking about cash rules everything around me. But no, no, but it is exactly what I was thinking when I put the presentation together. Yeah.
I think I have a general question, and for you or for the team, is to, when most operators are starting their business, they don't have an accountant on site. They're, utilizing themselves as the accountant. They're writing their own checkbooks. They may or may not have an accounting system even to begin with. At what point, when you're thinking about forming and starting a business, do you say, hey, I'm going to go ahead and separate it and get it out of my personal bank account and actually do a business banking account? When do I get an accountant? Maybe I don't get an accountant necessarily right away, but who and how do I get started of at least kind of plugging away and getting things into a system to where I'm assuming that there comes a point in time where you would need at least a fractional, accountant, bookkeeper, a fractional tax, someone who's doing your taxes, maybe eventually growing to a size where you might need a full-time person or an advisory person and things of that nature. How does a business actually think about that or start to think about that when day one of business, they're just operating and selling seashells on the seashore?
Yeah, Sally. Yeah, I think it's a good question, right? I don't necessarily know there's like a revenue number you can point to, right? Like at $20,000, of revenue a month, you should think. I think realistically, like when any business is starting out, you're gonna have to bootstrap it, and like I guess the easy answer to if somebody would have asked me that in the presentation, my easy answer would be like, well, you get an accountant when you can afford one. You know what I mean? Like. And so, but I think the point of your question is understanding when you can afford one, right? Like, and so, I'll start like when you're starting out. I think it's very beneficial for an owner operator to understand their accounting, or at least be like dangerous enough to get it done, because it's only going to serve you better if you really want to make this business work. It's going to serve you better so when you do hire an accountant, you know what you're paying for. You know you're hiring expertise, as opposed to if you started out and you just hired a fractional accountant. First of all, I think you'd be throwing good money at something you could very easily learn yourself. What we do is not rocket science, and especially in a very small, unsophisticated business, it's not hard to do the accounting for it. It's not hard to keep a checkbook register up. It's not hard to know who you've issued invoices to, who you owe money to. So and all these programs we've been talking about, the Zeros of the world, the QuickBooks of the world, the FreshBooks, they make it very easy and hold your hand, much like TurboTax does for your tax return. Like, did you have any kids this year? Oh, like it'll hold your hand. It's very, like in plain English, pay bills, record a check, receive money, post a bill. So that I think an owner and operator, especially starting out, that when you start climbing and understanding that your accounting is taking you 2, 3, 4 hours a day, maybe that's the time when you ask how I can have somebody come in here part-time and do this, and start asking your tax preparer, because hopefully by that time you have a tax preparer that could refer you to somebody, or a professional that you value their opinion is usually who people go to. I mean, you can always go to the web, find an awesome podcast done by cool accountants that do that kind of work, but usually it's from a referral. So I would say it serves everybody really well, especially small business owners, if they can understand how that accounting system works. They understand what's required of them. You can only screw it up so bad. And so, yeah, I think, I mean, unless you guys disagree, but I think that's my answer, or that would be my answer if it would have been brought up,
Yeah, no, I agree 100%. That I think that it's like everything, it's like anything else in life in terms, accounting is a cost, and you have to be in a position to pay for it to have it, yeah. Right? Yeah. And often we think of small businesses. I think one of the things that has been enjoyable about my career, and maybe resonates with the rest of you, is that we think about small businesses often as being things that grow from zero to something, right? Like, people don't start out of the gate with just millions of dollars of money in the bank to just burn in creating their business. Now, that does happen as well, sure. And we see that. And so, whether you can start with accounting is similar to a question of whether you can start with any amount of staff or employees in your business, right? Like, if you start out of the gate with millions of dollars in the account, and you've got that money to burn so that maybe you can focus on the 1 or 2 things that you are uniquely talented at in that business, that is a unique and fortunate position for you as an operator. I don't think anyone begrudges you that, but I would say that is an unusual situation. But it could happen, in which case maybe you have an accountant day one, right? And certainly venture-backed enterprises look more like that, right? But if you're starting kind of the classic, what we think of as American dream business, where you're starting in your garage and you're building it up from scratch, then you haven't built it to the place where you can actually afford to have an accountant handle your books on your staff for quite a while. I mean, usually you're going to be in excess of in size over $1 million or so before that really makes sense in my view. And that's going to be controversial for me to say, because there are many small business accountants out there that make lots of money off freelancers and operators who have much smaller sales, and there's many freelancers out there who have chosen not to understand their books and try to just have a bookkeeper kind of keep it for them. And maybe that's okay too. I don't deal in that space much, so I don't want to full on say that I think that's wrong or not the way to do it here. But I think part of what you were saying, AJ, I agree with in the sense that if you're going to be a business, like if you're not, like the other thing about that zone that I was just speaking to is that a freelancer business, that is what it is. It's not never intended to be anything more than that. A solopreneur or a freelancer business. If that, and so maybe there is a scenario there where you're never going to be above $1 million in sales, but you take a lot home and it makes sense for you to hire an accountant out. I could foresee that. Again, I'm kind of hedging around that topic because that's not a market that I play in. But if you're on the path to grow more than a solopreneur business, where you eventually will be hiring employees, you're going to be deploying capital, deploying people, that's in the business plan. You just aren't there yet. Then you have to wait till you get there, where your accountant is one of those people that you're deploying, and that's probably going to be when you are getting into the millions in your size as opposed to kind of just in the hundreds of thousands. And I wanted to bring that back to what you were saying, is that I would agree that if that's the path you're on, to be an operating business that eventually will be deploying capital and people, not just a solopreneur or freelancer type of operation. It probably ran out of battery. We'll just leave it. Not just a solopreneur or freelance operation, then I think there is a learning to do. I think that when you are that smaller size, you need to learn enough about, while it's not complicated, right? Because the size creates complexity. So while it's the smaller size, it's going to be less complicated, and you need to learn enough about it so that you have the opportunity or you have the capacity to manage it when it's complicated enough that you need more bandwidth, and you're going to hire it out. And at that point, when you're ready for that, then you will understand it enough to know what you're hiring. And so I think that is, I agree 100% with you in that context, that people should spend some time to learn to do some of it themselves early on in the life cycle of their business.
It won't just be wasted time, like if a business owner can understand the basics of their accounting, like that's huge. I think,
Well, I think that you framed it really well too when you said that when you're kind of planning on day one, even if it's out of your garage, right? You're kind of thinking, what is this business plan that I'm doing? And am I wanting to grow into something where eventually I will need more staff, more resources, more complex accounting and things of that nature, that you don't need it today, but that was part of your plan, that does help you make sure that you understand what you're doing in the moment while you're growing to that. And then at that point, whether it's because of volume, because of size, because of your own time commitment, at that point you're kind of deciding, when do I need to bring it on and what type of person do I need to bring it on. So I think you guys both answered it really well in terms of really thinking about it and when you're starting your business, like what is the actual ultimate plan that you're working towards, and thinking about how do you structure it to kind of keep you up and running while you get there, and then when do you need to call in some resources to help you along your way.
Yeah, and I could see that being kind of tricky because, on the one hand, you have to get to like $1 million in revenue before it starts to make sense to maybe have a full-time accountant. But I could imagine a lot of people getting to that point and then feeling like they run it well enough to know that they don't feel like they need accounting. And you and I might know better as having seen the ins and outs of a company run with or without accounting. But I'm curious, how do you convince that solopreneur who feels he knows, he knows, he has that gut check feeling of, I can tell when my business is doing well, but at the same time, you're convincing him that, hey, your accounting has a reason and a purpose for being there. How can you, cause that person to come around?
Yeah. Well, I'm not convincing anybody, I don't think, because I think if somebody has that mindset, like it's very hard to dissuade them from that mindset, because the way that you presented it, that they have this gut feeling and they, like that they know how the business is doing based on their gut feeling or how things are running. To change their mind, to see them value the accounting department or an accountant, or like really maintaining a clean set of like efficient books, that's a tough sell to somebody that operates on feel. I would implore them to like tell me how they're, maybe I would ask them, well, how's this year going for you? And then compare that feeling with actual facts and numbers and see if it checks out. If it's vastly different, you might be able to convince them otherwise. But if it's hovering around the same place, I doubt you're going to move the needle much with that person.
Yeah, I think the threshold there for a growing company is that they are growing beyond one person operator, right? Because in that scenario, if they do what AJ and I have, if you go back to when AJ and I were talking about his presentation earlier, and we were saying, well, the purpose, the benefit of accounting, the value proposition is that it helps you understand your cash flows. And then if you marry that with what we were just saying, that, well, we think that if you're a small startup and you're not really big enough to have multiple people, and maybe you're less than $1 million in size, that a lot of times you should be doing this work yourself, and put those two things together to understand your cash flow. So then bring in your scenario, right? Now we're starting to get bigger than $1 million in size. Now we're multi-million dollars in sales. And the question is, do they need us to understand their cash flow? Yeah. And I would say a lot of times they don't. But they may need us to help their team understand their cash flow, and their business is moving beyond just them. Right. And that's when to me, that's the threshold question, because if it is going to be just them in perpetuity, they very well may never need us. Mm-hmm. They can do accounting according to John Doe's accounting methodology. It doesn't have to be what we learned in school, and who cares, because it helps them understand their cash. And they've gotten this far on it, and if it's always going to be just the John Doe show for time and eternity, then it probably doesn't matter. But it's, the proposition, though, that we're getting on is if they're on a path to become a larger business with multiple people involved, it's not going to be the John Doe or the Jane Doe show forever. True. It's going to be John and Jane and Mary and Paul, and all of those people have to understand what's going on in the business and have that common language. And you use that in your presentation, that accounting is the language of business. Yep. And that's where just having it done according to how John feels it works for him doesn't work for an organization anymore, because it's not just him, it's an organization.
True. Well,
and I think
yeah. What I was going to say, though, is also if your question was more towards if you have somebody that's an owner operator that's doing the accounting and how to convince them to when it's time to hire an accountant, I would say that would be they would have to be oblivious not to understand when that time is, because the accounting work would take them so much time that they couldn't focus on anything else in the business. It's the accounting portion of their business is no longer half-time, part-time, quarter-time job. Sure. All of a sudden they're spending multiple hours a day trying to figure out finance entries.
Yeah, it could be a pure bandwidth issue, right? Like you could have a solopreneur who's blowing it out of the water with really high-value engagements, for example. I've seen it. Consultants who by themselves can drive millions of dollars of revenue, right? But that suggests they're probably the kind of consultant that is spending every hour billing clients, right? So when do they have time to do the accounting? So maybe it's not that the accounting is more complex necessarily. It's not that they have to explain it to anyone else. It's simply a bandwidth issue at that point, that they can make a lot more money doing what they do best. And so why not use other people to do the accounting?
Yeah, and I think I was going to add to that as well is that they could be getting feedback from their tax preparers of saying like, hey, you are doing the accounting, you're getting the daily stuff in there, right? However, your books are a hot mess. So maybe you should have someone review it, help you, assess it, maybe take a look at it. So I think tax preparers can give some information and details, bankers, lawyers. There's a lot of times too that they're going to be looking at your financials that you may think is great for, Jane or John or Joe or whoever. And they're like, oh, this doesn't even make sense. Like this isn't proper at all, and you're trying to make decisions off of it or trying to prepare your taxes off of it. You need to have some resources. So that could be interesting feedback as well. And that is maybe not necessary for advisory, but like for outsourced accounting type of situation.
Yeah, I'm of mixed minds about that, because I would say our tax, I think what you're describing for sure in the banker scenario, but our colleagues our community in the tax community, I think they're always at war with themselves on this issue, right? Because while they will say, client, I really need you to have a clean set of books for the preparation of the tax returns. And sometimes they move beyond that. They extrapolate themselves into our world, and they're thinking on behalf of the client. They're like, you probably need better books in order to manage your business, right? But if you get back to this proposition, is if you have an entrepreneur who's operating the business primarily on their own, they've been doing it for a decade, they know what it works, and maybe it's true that their books are a mess when it goes to tax preparation. So what's the value proposition of having better accounting for the purpose of the tax return? Well, the tax preparer will say, well, because we have to do all this work before we prepare the tax return. But in fact, they do it every single year. They do the work,
until they don't,
and they do it efficiently, and they build it, and it's like, so that, I think, unfortunately, as accountants, we have to realize, if we put ourselves in the entrepreneur's shoes, that dog doesn't quite hunt, because if the proposition is, well, you could save a few $1,000s of tax prep fees, and you can save the frustration of your tax account by having a clean set of books, and the entrepreneur has no other reason to have a clean set of books, and the alternative is for them to hire somebody like us, which is going to be probably tens of thousands of dollars throughout the year in order to keep a clean set of books. It's like, well, of course I'm going to pay the CPA firm a few $1,000s to clean it up at year end. And that's the thing is, and I wouldn't, if those are their alternatives and they really don't need their books to run their business, then God bless them and be on their way and do that. And I think if our tax accountant friends and our fellows, don't like me saying that, then I would say quit providing that service for a few $1,000s at year end, if that's the way you feel about it. But until you as tax accountants quit doing that, you're not going to inspire them to have my services for much more money to keep their books straight.
Or charge them more where it's worth your time.
Yeah.
Right? Where you're not so angry about a shitty set of books.
Right. So, I think we often get accountants, we get wrapped up in this, in what's best for us. The client will quit asking you to do it. But, I've hard pressed to see CPA firms who do that. Even now, there's a lot in our zeitgeist of the CPA world about firms firing clients because they're not the best clients, or they're below threshold fees and they need to save their time for the highest and best use of their time. But I guarantee you, our colleagues out there in tax firms are still closing books that could have been closed earlier in the year for, pushing work into their tax seasons that could have been done by somebody like us earlier in the year. If you accept that engagement and you do it, you're just encouraging the client to behave that way. And what else can you say? Of course they're going to do that.
What do they used to call it in accounting, eating shit and cashing checks. Just eat shit and cash checks. That's it.
So we waited from advice to the operators to now
advice for tax preparers,
providing backhanded advice to our fellow accountants. But yeah.
All right, I have one more question before we close it out. Actually, the way that this presentation came about was I was approached by the CEO of the Beaverton Chamber, and she wanted me to do a whole presentation on which accounting system was better, QuickBooks Desktop or QuickBooks Online. That's how this whole thing came about. And I was like, that'll take me 5 minutes to answer for everybody, so why don't we do something a little bit different? And that's where I came up with the accounting for your small business.
Yeah. No, we do see that with operators and maybe what I would categorize as some old school bookkeepers who really push in favor of QuickBooks Desktop. And I can lay out my reasons why, but then I'm just talking, so maybe I throw that out. Why do we think that is? Why? I think if it's not obvious to people from what I'm saying, we typically advocate for cloud-based online systems for your accounting systems. But why is the alternative there? Why do some people really like themselves desktop versions of their software?
I'll tell you why. So is because everybody likes, anytime they have to learn something new, that's not a great feeling for them. And so once they find a way to do what they're doing, which QuickBooks Desktop was the standard for a very long time, I think that became a lot of the industry norm. And then people cling to that for the sake of avoiding learning something new. And I think it's it's the sentiment that happens in all areas of life. It's not just about accounting, that idea that we're going to stick with what we know, but I think it's a really bad sentiment that people naturally fall into, and it causes them to avoid all other options, one being QuickBooks Online, other being entirely different softwares that aren't even QuickBooks related. And so, yeah, I think I've seen people in that mindset before, and that's how I feel like they get in that trap.
I've also seen people who, it's some of the features, there are some features in the desktop versions that people do like, and they're only aware of because they utilize the desktop versions, that it's not exactly mirrored on the online system. I would say typically there are small, in my view, they're smaller features. They're not that critical in terms of not wanting to switch to a different system. But I have seen a lot of people say that, well, I know that QuickBooks Online doesn't do this or doesn't have this neat little kind of viewpoint that I'm so used to. And so then they kind of get hung up on that. And I think the other one too was kind of, QuickBooks Online was originally, or what has been, kind of an online subscription model basis. And I think there were some people, and back in the day when you first got the desktop, that you could just pop in the disk, you bought it once, and you only had to pay if you needed to do an upgrade or things of that nature. But a lot of systems now are moving to a monthly subscription anyway, so you're not actually saving money anymore from a desktop version. So that kind of is out, not really the same anymore. So people can take that away from their viewpoint, but it is just making that change and not in what you're comfortable with and some of the features that you may or may not like. And then also the big scary thing of having it be on the cloud and not be on your desktop can alarm folks, for especially small businesses or people who don't necessarily trust the World Wide Web.
Yeah. I think when I was in public accounting, that was always, everybody always harped for QuickBooks Desktop, and one of the main reasons was to save a couple $100 a year, because you could use that product for 4 or 5 years and purchase it once. But that's going away. QuickBooks Desktop is moving to a subscription-based service. So the days of paying $350 every 5 years for your accounting system are over.
Yeah. Well, and I think both, Charlie and Tammy and you, and I think what you guys are answering is very confirmatory of what my intuition is on this, which is it's the community or the world underestimated just the depth of workflows that were embedded in desktop systems, right? So whether it's like keyboard shortcuts or that special report that your workflow relies on that can only be found from the desktop system, it's like I have work that I can get done within a certain amount of time, and that ultimately, we were talking earlier, the cost benefit of accounting, right? Yeah. The accounting costs a certain amount based on the time that I can spend, and I can get all this work done in this amount of time because of the keyboard shortcuts and the presentations and reports that I can pull, that I can rely on, and I can slip into some kind of template I have or whatever that is in my workflow. And this new stuff, this newfangled technology is disturbing my workflow on that. And yeah, I think that's how I've seen it. I've seen the resistance all the way along, but I think, as you would expect with that type of resistance, it's fading with time, right? Because as those folks who have their workflows embedded in those desktop systems kind of retire out of the system and new people are coming in, you just have less and less of that as being the basis of the resistance to cloud-based systems.
And the other thing I was going to add too, that you just made me think of, is that sometimes it's the thought process. It's going to take so much effort too. I'm already on desktop, so why would I take the process of actually converting it or uploading it or transferring it to the online system? I'm sure that's going to cause a lot of work. And so it's understanding what that actually would or would not take, and not taking the time to do that. Because there are, if you think about it too, a lot of times, and you guys kind of talked about it earlier, the restraints on the resources on the accounting side of actually having time to even think about something like that, or wanting to take the hours, or maybe it's only an hour, you never know, of actually doing that. It's not even in their thought process, and they don't want to spend it.
100%. And I've actually done that as well. Even though I say we prefer cloud-based systems, I've inherited desktop systems and just kind of said, all right, well, I don't have time in the schedule for a project to convert this in the near future, so we're just going to roll with this desktop system for a while. And yeah, so I totally see that.
There's some 80-year-old CPA right now that's feverishly typing a letter that he's going to send in on WordPerfect. You know what I mean?
Just a tie, though. Just a tie.
About, thank you for finally realizing that my desktop 2006 Pro, QuickBooks version is what I need.
It's what I need. Yeah.
Yeah.
Well, and they can rest assured when I receive that, I will 2-hole punch it and put it in my filing cabinet. And then
2-hole punch it.
Boy, that takes me back. Right?
Like, do
The
they
old
even make
tax
those
files?
anymore?
They do, because remember the tax files used to. Oh man, we were
Wow.
getting a whole bunch of nostalgia here. On that note,
I saw one the other day.
Did you really?
Yeah, I saw CPA's
Dude, awesome.
paper files, and
Yes.
and it had the
2-hole.
2-hole punch was
In the
they were rocking the 2-hole punch.
Yes.
Wow.
Yes. Did it have the cut corners with the?
Yeah.
Thick padded binders.
Yeah. All right. Well, thank you guys. This is enjoyable as always. Not the least of the enjoyment came from the whiskey. It came from the good company and the topic. So yeah. Until next time.
Yeah.
Bye.
Thanks.
Bye.